that the state has to wither away in the ultimate stage of communism which Marx has defined. So an institution will wither away if there is no need for that institution. Ragini was mentioning about the work which we are doing with support from DFID and PSIG for working with the smaller institutions and bringing up to a level where they can be reasonably competitive. So in this, I feel there is a great role for a supportive environment, because some of the methodologies and systems which are more suitable for a bigger institution in a unmindful way, they should not be applied in the same manner to the smaller institution.
So we'll come to that, in terms of what are the study findings and some of the solutions and challenges as we sort of peel the onion a bit further. Tamal, I saw you looking into your phone a couple of times. Is there any update that is hot off the press that you want to give us? And then maybe you can sing us those first two lines from the Jim Reeves song that you mentioned in your article today when you described the state of the sector today.
Thanks. No, I have a slightly different take, and I can afford to do that because I don't have a stake as such. I'm not a stakeholder, unlike Nilesh, who's an investor, and Ragini, who's an institutional helper, and
the royalties from the book.
Satish. No. So I personally feel that they should not be there. I mean, I'm sure bulk of the audience is from the mall MFIs. From the perspective of, because the segment where you need the help, then it continues. And I think that when you talk about small MFIs, it's very vague thing you have not quantified. Is it a small NBFC MFI? Or is it small MFI meaning the trusts and the NGOs? So I presume you are talking about non-NBFC, not-for-profit, those MFIs.
So let's double click on both. And let's say, in your perspective, small MFI NBFCs, do they have a future survival?
Okay, so essentially, if you are a trust or NGOs and you are dependent on the grants, so which means you can never ensure the flow of funds. And the people, the borrowers who you cater to, they need a continuous hand-holding. So you are constrained to do that. So that's the reality, and that has now further changed with the two important developments as we talk. One is this so-called demonetization move, which is the government's push for the cashless economy and all. And second is, you will find that Indian Post in the form of a payments bank coming up. Now, Indian Post, if I'm not mistaken, their business model will be close to 1.5 lakh branches. That will be their back office kind of, that will be their actually, kind of hub and spoke model. They are planning to have 600 and odd offices in the districts, which will be all linked to this 1.5 lakh on the branches. So if you are talking about MFIs, what Nilesh and Ragini spoke about, diversifying business and selling other things and all, Indian Post will take away everything. It will actually even challenge State Bank of India in certain areas, the government businesses and all. So that's squared the pitch against you. And as far as demonetization move is concerned, that's also one of thing you can say. And as soon as we find that the flow of new currency coming back into the system, things will be much better. Yes, but the government is determined to push for a cashless economy. And in that segment, the entire MFI industry needs to change, because if I'm not mistaken, about 90% your transactions are through cashes. Now, can the small MFIs exist in this segment? I'm not very sure about that. So I think the growth path is very clear. The large MFIs, 8 of them have become small finance banks. And if the medium size, they become relatively big tomorrow, and if they have a good track record, they have the future of turning into, again, small MFI, small finance banks. Some of the small finance banks in due course will become universal bank if they can prove. And primarily the non-bank, the NBFC and the profit-making MFIs, their future is to become business correspondents and actual work as the last mile. I think many of them, or some of them, have become business correspondent. The rest of them who are not, they need to be. So those purely the NGOs and the trust, I'm not very sure in what form they will exist. Other part is this, whatever small MFI you talk about, whether NGO or non-NGO, you have to do some introspecting and the soul searching, and probably you have to blame yourself, because within the industry, there is a sort of predatory game. There are certain big MFIs are, lurking in the dark something, and they see that some small MFIs are doing little business and all, and then one day they just jump onto that and grab those businesses and all. So it's a situation where you need to, do your housekeeping even better. If you are really concerned about the small MFIs, then like Satish's organization, Sadhan and all, there need to be little, there has to be certain rules by which you need to play the game. As I said, your big MFIs they don't want the small MFIs to be around.
So let's use the Republican Party rules. Since he mentioned you, Satish, can I ask you to give a quick 1 minute on that? He specifically called out the smaller NGO MFIs and the category which is primarily purely with Sadhan as a network body. How would you react to something like that? And then we can come back to Srinivas. And I know Ragini also wants to say something.
I think the issue here is not with regard to for-profit and not-for-profit MFIs, because in the not-for-profit sector, cash poor it's also a big MFI. By basically on principle and on philosophy, they remained as a Section 8 company and not converted into an NBFC MFI. And one thing I would like to bring to Tamal's notice is that an NGO MFI or trusts and all, it doesn't mean that they are depending only on grants. They also borrow and lend. Only thing is that their ability to borrow is lesser because they are not in a corporate form. So there again, I am saying that if the institution is able to deliver its services and find out clients, and if the clients find that the institution is serving their needs and support its existence, then that institution will exist. Otherwise, yes, it will. So now, if you're saying that, then why MFI sector, at least why it should be there at all? We have State Bank of India with so many branches. So it all boils down to that. So who is able to give the services the way it is required? So then they will survive.
Okay, excellent. Ragini, we'll come back to you in your term, but I want to get Srinivas in because he mentioned it's a matter of getting the bank funding, and not only the NBFC MFIs today, but some of the other NGO MFIs are able to access bank funding. He mentioned cash poor and people like Dharmasthala and others, which are large in their own right, but not NBFCs. How would you categorize a bank's or banker's stake vis-a-vis small and large MFIs, NGO MFIs, NBFC MFIs? Can you throw some light on that?
So as a bank, we work with almost all legal forms. We work with the NBFC MFIs, we work with not-for-profit, we work with pure business correspondents. For us, what is important is the institutional delivery capability to reach out to the last mile where the bank has a challenge. And to that extent, whichever institution has the demonstrated ability or has the comfort and confidence which it gives to the bank, we are neutral to partnering with that entity. Coming back to the earlier question on how I see the future for small MFIs, I see it very hopeful.
You're the first to say very hopeful.
Yes.
I've noticed everyone else said just hopeful.
Yes. And I just want to go back to the history and see what was the very purpose with which the MFIs have come into play. So at that point, and I think I take Satish's point there, the purpose I think is very important. The purpose at that point of time was providing access. And now we have moved away from access to a situation where we are having discussions and debates on multiple borrowing, indebtedness and others. So we've moved from one extreme, lack of access, to the other extreme. And I think that's where is credit alone the product that one should look at? And is there something, the other topics that we discussed in the morning about meaningful financial inclusion, can those be done on scale? I think there if you have to really deepen and you have to really penetrate and make a difference for offering a meaningful financial inclusion, perhaps the smaller institutions will have a say. And I'm not comparing on the traditional metrics where, I mean, on a traditional metrics, if you see on an axis on a financial profitability on efficiency indicators, there's no, I think it straight away goes in favor of the large MFIs. But if you look at from a meaningful financial inclusion perspective, and whatever developments we are seeing today, there are no major differentiators. The technology is available. I can go for a OpEx model. I don't have to invest in technology, which is what many of the MFIs in the past have done. Today I can partner with a bank. You have the entire digitization which is sweeping the economy. You have a government which is almost running at a bullet train speed. You might have some institutions which may not be able to catch up to that speed because of the legacy issues and other things. And that's where I feel that the institutions which are able to take this opportunity and are able to meet the requirements might see, but that's the key thing of how they are able to position and differentiate.
Great. With that, we save the best for last. The only practitioner on this panel, the one who's actually there, out there, giving the loans and hopefully recovering it back, given where we are these days. But over to you, Anand. Give us your thoughts. First of all, bleak or hopeful, and then why?
So you stopped at hopeful, but I would go one step further and say very hopeful. Okay. See, I would define small.
I think the air is different on that side of the panel. You're breathing in a different air.
Yeah. See, I think one is, if you see today where I am coming from as a practitioner is, you have large players. Even if you see the larger players, if you go to a customer on the ground, are the larger players solving the problem of finance, just credit? You can get an answer that it is not. What I'm saying is that even if you have larger players, even in the most concentrated markets, all the solutions are not coming. That's because larger players tend to be very, very focused, systematic, and they have very tailor-made products. And it is that space which the smaller MFIs would take. Maybe it's not the same smaller MFIs. Many of us may not even be there tomorrow, but I think there is enough space for a lot of creativity to come in. And I think that will happen because even if you see MFI space, bankers were not there, then the microfinance sector showed that there's a market, few of us became very large, and we have created an industry. So I think this will continue. You will find other areas which smaller MFIs will come and innovate, will show that there is a market here. So I'm really coming from hopeful saying because we haven't solved that problem.
But you said hopeful, and then you said many of us will not be there tomorrow.
That's right. What I'm saying is that that's a good question you pointed out. I think what is happening is that we are seeing microfinance as group lending, and as smaller MFIs, if you're just seeing it as group lending and saying that tomorrow I also want to become another large player, that may not happen. We may have to take a different path, is what I'm trying to say.
Excellent. So, and that's something that we want to be really focused on as a takeaway from this panel, to look at solutions for small MFIs. I know that Goshta is here, an inspiration to many MFIs who want to become large universal banks. And Tamal talked about the evolutionary trajectory that MFIs have to NBFCs and then to SFBs and then to universal banks. But Ragini, is there something from what you've heard from the last four speakers that gives you that reason for hope? I think Nilesh mentioned it at the outset, talking about specific niches, specific areas. Is there something coming out from the study? And then maybe we go to Satish to quickly corroborate based on what your study with Sadhan is doing.
So very quickly, I want to respond to Tamal. In 1969, when banks got
then
nationalized...
you're giving him room as per Republican Party norms to then respond. So we'll do that. Okay.
1969, when the banks were nationalized, we thought we'll include everybody.
Right.
But we have still not done that. So I think even after post-bank comes, there will be still room for players like Chaitanya, is what I feel. But of course, differentiated, not the same thing. So, so we've done different things with small MFIs. First, we realized the limitation of SIDBI as a partner to reach out to many small players. So we broke that down into saying that we'll find another players who are closer to the ground and do a second level of intermediation. So we partnered with Ananya and Giri The CEO of Ananya is here, and I really have a lot of appreciation for what he has done with our program. So we gave them a sort of a returnable loan, which they lent out to many smallers who were not getting loan in the aftermath of crisis, with a rider that whatever interest differential they are making, they will invest back into capacity building. And which they did a great job because they were on the ground, they were doing it, they were working with them. So in PSIG, in our midline survey, out of 28 MFIs that we worked with, 12 of them have moved to another level, and 10 of them from small to mid-size. So there's still hope out there. So if you look at PSIG states, UP, MP, Bihar and Odisha, 42% of the population, 36% microfinance penetration. So still room to grow for many of them. And this is just the total. I'm not even going into the lower income household segments. So that was one. So that is one thing that we did with Ananya, which worked very well. So it was like this, that when Ananya's first payment started to come, first 3, SIDBI became confident to give them another loan. So it was, so that helped them grow a little bit more. So it was just phased out. Then also with Ananya, we realized that we could not reach even smaller, which were non-profit and cooperative and other set of. So we got into partnership with LAMP Foundation, LAMP Fund, which is now doing the same thing for another level of institution. So this is all testing, it is like, if they survive this, then they're in or they're not. So it's nothing beyond that. It is loan, you test, but capacity building. So it's sort of a nostalgia, we started doing this early 2000.
Correct.
We still, because it is required. And again, our cut was, are they in the geography where nobody else is, or doing something which nobody else is? So then it makes sense for them to exist,
Excellent.
And another work that we did with Sadhan is about policy, and I would ask him to talk about
Super.
it.
So, Tamal, since you mentioned the T word that normally happened in the Republican debates, and that's how Trump always got his say inside, the other T word we have on our panel, Tamal, so you want to quickly come and comment on the fact that there's very hopeful to your left and hopeful to your right.
Say, essentially all those, you are trying to make a TV debate kind of thing. I'm not getting into those kind of loud reaction and all. But the point is, everybody is making all the motherhood statement that efficiency that matters and all. That's true. That's true about big, small, everything. Yeah, if you are inefficient in a competitive market, if you take up the challenge, you will survive. So I don't need Satish, the Sadhan boss, to tell me that. Everybody knows that. Even school kid knows that all. The fact is, as long as the banking system remains lazy in India, which by and large, MFI industry will remain there. About that, I don't have any doubt on that. You have, if you leave Bandhan out, because Bandhan has become already a bank, so you have about 65,000 crore of such. And you see the number of MFIs and the volume, you will be the bigger MFIs, probably 60,000 crore, and you have few hundreds to make another 4,000 crore and all. Now, do they need to be there? Do we need them? Why do you need them? Why do you need them? Because to give 26%, this thing, either giving a loan at 26% or 28%, or making feel happy that I am doing some charitable work. I am not supporting, I am not a great believer in either of them. Yes, efficiency is there, so you bring down your rates if you are capable of doing that, which means you need to have your funds flow, which means you need to have, and because of this push for the cashless thing, you need to have your technology in place, and you need to have multiple alliances with banks, with small finance banks, with payment banks, with payment wallets, so on and so forth. Are those small MFIs with 3, 4, 5 crore, 10 crore, there could be an exception, what she mentioned and all, there will be exception everywhere. But by and large, philosophically, they need to upgrade themselves, or they need to just accept the reality, look, I don't need to be there.
No, so I'm liking what you're saying, Tamal. I'm not trying to be a TV debate, where there are some who are looking for their next role there. But I'm trying to come back to the point you made about if the banking sector becomes lazy, of course there's a role. And we have today many of our MFI partners who are now in that banking sector, full-blown, or SFBs or universal. We have, I can see my friend Pawan Kaushalya from IDFC and others who are now sort of rejuvenating what banking is all about, RBL, all the new private banks looking at that space again very, very differently. So what the laziness of banking 10 years ago or 12, 20 years ago, which caused microfinance to be where it is, may be going away. And so to that extent, how do you see that pan out?
You're asking me?
Yeah, and then we
No.
come back to Satish.
No, laziness is only one side of the story, and there are, that is a little oversimplification, because you feel happy not taking any risk in those hundreds and thousands and millions of non-collateralized loan. Rather, you give one loan of $1 billion to one particular airline and get it sunk. You don't. No, that is one part of the laziness. Other part of this, our state-run bank, which account for roughly 70% of the total banking assets, they are constrained. They are constrained by the industry-wide settlement. So which MFIs can have sun for the soil movement and a different cost structure, where a State Bank of India or Punjab National Bank, Bank of Baroda cannot do that because of the industry-wide settlement. A branch manager in Warden Road or Carmichael Road in Mumbai, the toniest places in India, will earn almost the same salary of a branch manager, say, in the interior Maharashtra like Gachurali, barring a few thousand rupees of city compensatory allowance. So in that kind of wage structure, unless the banks are allowed to do through subsidiaries or different set of things, which is not possible because the RRBs had to face that long drawn battle in Supreme Court and they lost out. So that's one side of the story. And the other side of is all the new age private sector banks and all, the people, they're competent professionals from IIMs and different business schools and all. Why would they go to rural India and risk the health and education of their family? So they will not have. So as long as, but technology may change. Now this push for digitalization, we may see now the mini ATMs everywhere, which our banks are actually driving, and so on and so forth. So laziness is oversimplification, but the part is this, a bit of laziness, a bit of constraint by industry-wide wage settlement, and bit of other issues. The net result of is this, there's a huge opportunity for the other intermediaries to do business there, which MFIs have been doing. But now situation has changed. In 90s, or Ragini started talking about 1969 and then some 90s, and Nilesh spoke about 2010 or 9 when he saw the opportunity post under crisis, some of them. Now 2015 and 2016 are different. Now you have 10 small finance banks, you have 8 payments banks. Reserve Bank of India is saying more banks will come. And you have the push for cashless economy. So you have to appreciate all the changes and talk. Let's not get very emotional. I know all of us will say and give the motherhood statement that efficiency will win. Yes, efficiency will win. I'm not saying a broad stroke statement that everybody will lose nothing. There will be some losers, but there will be some winners. But philosophically, I think we need to take a relook at the entire structure. Some of them need to ask, do we need to be there? And what do we do if we are there? So that particular song you mentioned. And there has to be a gradual path. Small finance banks, some of them becoming universal bank. Larger MFI and NBFCs becoming small finance banks. NGOs and trusts becoming NBFC MFIs.
Yeah.
That's it.
No, and so that's good, observation. Satish, the whole, I think, sort of the 100-pound gorilla in the room that we haven't talked about vis-a-vis the small finance banks is the demonetization leading to demoralization. Are we finding the mood and the tempo, low in the smaller MFIs? Are we finding that happening and really getting pulled down further? Is this the straw that's going to break the back of the small MFIs?
It is, you mean to say this demonetization?
Yeah.
I don't think so, because immediately after that we have been in the field. We interacted directly with the groups across various states. Yes, as I have been sharing my thoughts with Tamal also. First week, of course, there were some issues. But otherwise, no. Like, as it is affecting any other part of the economy or the sector, so ultimately if it is having some effect on the income generating abilities of the unorganized sector or the unorganized classes and those who depend on daily wage labor. So those issues, if they have a real effect in long term, because at this point we cannot hazard a guess. So otherwise I don't think it's going to be any make or break point for the smaller MFIs. I would only say that even in our report which we had commissioned with DFID and SIDBI support to M2I, a range of suggestions have come that there would also recommendations that probably some institutions should just convert themselves to BCs and act as BCs of the bank. And some may think of merging with a bigger institution or a neighboring institution. So all varieties of suggestions were there. In the end, I do agree with Tamal that an institution has to exist if it is able to provide the services. So if it is not able to provide the services, then there is no locus standi for any institution to exist. So here I would like to bring the scale as well as geography. So some of these smaller institutions operate in remoter geographies, and we have like at least half a dozen of our member institutions working in a state like Manipur or Tripura or some parts of Assam, then difficult parts of Chhattisgarh or Jharkhand and all. So where even probably a bigger MFI would be hesitant to go and service. So I would only say that these are small institutions catering to people with small means. Actually, during lunchtime, I was just having conversation with Dr. Bakshi, a former chairman of NABARD. And he made a relevant point. He said that if the small people evolve and they reach a higher level of income and they no longer remain poor, then probably they will not need services of a microfinance institution at all. They will do direct banking with a mainstream banking institution. So I think it is in this context which we are saying about a smaller versus bigger MFI, and all institutions were small one day, and some of our smaller institutions are growing very well, like a couple of institutions I would not like to name started off. 2 years back they were very small, but now this financial year they have shown good results. So that evolution is already there. Small doesn't always remain small.
Excellent. So Nilesh, that comes back to what you said. Maybe you and Srinivas before we go to Anand. But the two of you looking at, and probably I'll ask you to take away your institutional hat, but put your hat as a sector. So you look at it from a pure play investor hat on, not as IFC. When you look at what's happening in terms of the trend of events, and then coupled with demonetization, as an investor, intuitively, what is your take on small, upcoming startup NBFCs, MFIs?
So, I mean, if I just draw a parallel to, the NBFC segment, I mean, I was told there are roughly about 5,000 plus licenses even today. But the ones you hear, pure NBFC, is about max 100, give or take. But that doesn't mean the balance, 4,900, whatever, don't exist. They do exist, right? They do attract some attention from bankers, lenders, investors, so on. It all depends on which niche they are in. So I think what many others have mentioned, the question is the niche and what do they address in that relevant market. And as an investor, I think what people look for is stories, essentially. And irrespective of whether it's me or anyone, what interests people is what is the story that is coming out from this particular entity or segment or space. And I think that will always have a value. So irrespective whether it's small or large, the good thing is that over the last few months, I mean before the demonetization debate, the fact that Ujjivan and Equitas listed also changed a lot of information play around the microfinance segment, at least in the investor base. So yes, there is a period of sort of uncertainty because of what is happening in the sector. But to me, that is more a 3 to 6 month kind of debate. People will wait and watch. But I think the essential story underlying hasn't changed dramatically. And if there is a relevant niche out there, even if it's very small today, I think it will attract the same kind of attention going forward.
Srinivas, he's talking about 3 to 6 months. As a banker who thinks March end and priority sector targets and net bank credit and agri sub-targets, how does what's happening in the demonetization affect that calculus? And more importantly, do you see less and less dependence on the small MFIs providing banks with that number going forward?
Yeah, I think every such development has a positive element. We've seen the AP crisis resulting in the credit bureaus becoming functional and effective. I think demonetization, maybe not immediate, but will definitely allow the banking trails to be created for these customers who were not banking or using the banking accounts. 3 to 6 months is too short a period in my view. The immediate, we've been closely tracking since the November 8th announcement. As of now, the recovery rates are near normal, excepting a few hotspots in the country. But then we are also hearing some signals of people getting impacted because these are obviously not only in subsistence activities, but are also engaged in construction labor and others where there is some impact felt. So particularly I've heard stories of migrant labor moving back to their places and all that. So it's going to be a painful period in the short term. But then I think the push toward digitization will further reduce the costs. I'm sure the government is also going to come back with better sort of direct benefit transfers, which will reach out to this customer segment. Their usage of the accounts will be much more effective. And then over a 2-3 year period, I think we will see a lot more this thing. We continue to maintain a strong view about the sector. So we're not...
So I'm still coming back to the question on priority sector assets. How are the bank going to see that pan out? And is the dependence...
There is a drop on the microfinance portfolio. We are seeing currently the inability to disburse because there are withdrawal caps. Even if we disburse to an MFI or to the client, the restrictive caps which are available on the withdrawals are not permitting. And it's harming a customer. If I have a PMJDY account and I disburse 30,000, you'll have to wait for 3 months to withdraw at 10,000 per month. That's the cap which is applicable. If I give a loan to an MFI, it can at best withdraw 50,000 per week from the current account. So there's hardly anything that we are able to do. So we are seeing a drop in the contribution of PSL from this portfolio.
And if you take away the demonetization impact for a moment, and again look at it with bankers, and if you again, circa 2000, early 2000, where most of the PSL, I agree, came from, large chunks came from lending directly to MFIs. Many of them now banks are talking about just interbank participation, meeting their PSL targets through those, doing certificates through small finance banks and others. Do you really see a role that banks would ever play, would ever go to a small MFI, or going to meet all their PSL needs, at least for that chunk, from sort of other sources?
I think the requirements at a bank level will be so high that meeting everything from the small MFI, if that's the question, I don't think that will be the approach followed. But again, coming back to my original point, I think from a meaningful financial inclusion, there will be a lot more work which will get done by these institutions at the ground level. And that's where the association will happen.
Anand, maybe you can give us your perspective about how easy or difficult it is for bank funding to come by. And from what you're hearing from other small MFIs, maybe you can just share where do you think their key challenges come in? Because I want to do the next round as solutions for small MFIs. So maybe we'll end with you on this round of challenges.
Yeah, I think for small MFIs, once you pass a certain threshold, that depends on banks. Even for small MFIs, I don't think it's difficult today to get bank funding. I think if the banks see that the basics, governance, systems are in place, the funding is there. But you have to cross that threshold, and I think that is the key.
So maybe we can start with you. What do you think are the solutions, if there are 1 or 2 or 3, max 3, of things that you need or that the sector needs or that we all need as an industry to put in place to be able to support small MFIs if we think there's a way forward? And since you were very hopeful, I'm assuming you think the answer is yes, there's a way forward. So what should be put in place?
I mean, talking as a smaller MFI, I think one is it's difficult to expect solutions from outside. I think.
So just to give a perspective to the audience here, is MFIs about 250, 300 crores?
Yeah.
So you'll have to also sort of scratch your memory and think back to when you were below 20, 30 crores. That's the number Tamal was talking about in terms of small, when we were talking small.
Yeah. So one is, I think, solutions, a lot of the solutions will have to come from the MFIs themselves, because I think the sector is structured in such a fashion because banks lend, but they cannot take risks. So they will not come forward beyond a point. You get support from institutions like SIDBI, which again is not maybe as quick as you want it to. So you will have to take the path. So first is that I think we'll have to figure out solutions for ourselves as MFIs. That's why hopefulness is very important. You have to be hopeful that you can find a way out. Second, I think the days of group lending and I will become the next small finance bank or a next Bandhan is, I think it's a fact that you have to accept it can't happen. There may be one or two cases, but I think that model of success is done. The third is, I think, which is a bit different from, if you look at the sector as more than just an industry. I mean, I'm saying in an industry, you have many people coming in, venture fund comes in, few people survive, rest, just die out. Here we also have a social angle. So it's important that there are a lot more players there, so who are happy surviving at a small scale. I think it's not expected that everybody should become very large, because your social ambitions may be to serve a community. One has to find a space for it. How do you do that? And I think that's a solution for the larger sector to think about. Anything else?
Good. No, that's good. I mean, I think the fact you're pointing us back to the reason we originate or the reason we exist is for the client, and if we are happy serving a community or two and being focused on that, that's an option and a solution for a small MFI. Srinivas, maybe to you in terms of what do you think could be solutions for small MFI's survival? What could be put in place? When I say you, I'm thinking our days, when we were both, I mean, I was also a banker looking at MFIs, and at that time, guarantees by development agencies played a big role in energizing us to lend to small MFIs. That time, a lot of the big ones today were very small, 2003, 4, that time. Is there something that you think from a credit guarantee perspective that would encourage banks, or any other tools that you think banks would make it easy?
Yeah, again, coming back to the point, now the access is not so much of an issue as we see from the data. But then if we are really talking about digitization, it's not going to happen without somebody actively playing and building this ecosystem, and it cannot happen automatically unless and until some player regionally invests and builds this entire piece. So I think the soft funding which can boost this, which is the digitization, building of the ecosystem, the financial literacy and this thing are the key things which in my view would play a very important role, and that's how the differentiation and the entire meaningful financial inclusion will come into play.
Tamal, you seem to believe more than just tweaks, there needs to be a fundamental business model change. I think that's what your article in today's paper talked about. Maybe you can take us a little through that, and do you think we're smoking something that we shouldn't and believing that it's all hunky-dory and going well? And we're not really waking up and smelling the coffee in terms of where the reality is hitting us in the face.
No, actually, I mean, I just no point in repeating what I said. In fact, Satish also accepted whatever I said. He was a little sentimental, but exactly what I said, he said in a different subject, in a different language. He spoke about evolution, he spoke about how things are change and all. So fundamentally, I am saying you need to be a profit-making, meaning and profit-oriented organization, right? You can't be in the space just for charity and all. You have to have a profit-making organization, and if I am a borrower, I also need to know that I need to pay back. Now this demonetization, if you see, I mean, we are talking about pushing into cashless, everything is fine. But if you look at this entire thing, what is happening in this particular space is a little bit of complex. There are a few strands. One strand is this: if I am a borrower, my business, etc., is being affected. Okay, so my return on business, which had been till recently fine, which is now dropped and all, so I need to claw back, I need to figure out how to pay back. Second, many of the borrowers are being used as a carriers for distribution of the so-called black money or unaccounted money. You have seen that how the Jan Dhan accounts have been doing it. Third, Reserve Bank of India has given a leeway for income recognition norm for 60 days. The loans which need to be repaid between November and December, instead of 90 days, they can get additional 60 days to 150 days. There will be many of the borrowers who despite their ability to pay back will be tempted to use this window. And I am sure there will be certain quarters in political level, political circle, if it has already not started, Satish can tell us, probably it has already started, that's what I hear. They are actually instigating various segments of borrowers in different parts of India, don't pay back. Which is a purely regulatory forbearance for the industry, for the units, being misinterpreted and being conveyed to the borrowers. This is actually regulator saying you don't pay back, what can they do? So you need, it's a very complex situation, and it's been changing every day. And on top of that, you have the issues what Srinivas said, that restrictions on how much one can withdraw from banks and so on and so forth. I'm sure Srinivas will be an extremely well-wisher for his organization because they can play a business correspondence for them. I think SK is now the Bharat Financial, the largest, one of the largest. If you leave Janalakshmi out, then this is the 12,000 crore, it's your, na? And given a choice, you would like to take over. Given a choice, you tomorrow would like to take over SKS or for that matter, any other efficient, because you won't get this kind of franchise, kind of things and all. So banks, of course, there will be well-wishers. Nilesh also, of course, will be well-wishers. But if you see the ground reality is, over the past 2 months has changed and it has become very complex. So the immediate part is how you get over, and then of course all your digitalization and whether you go for capex model or opex model, so on and so forth comes and all. But if you leave this apart, philosophically I think if you need to be in this business of giving small loan, you should treat yourself, this is a business, not a charity. So first that. And if you do that, then you need to convert yourself into an NBFC for profit. And probably you need to become a banking correspondent so that you can open up other segments of fee-based income and all. And then you open up different kind of alliances with different kinds of banks and digi payment platforms, so on and so forth. And there will be business as usual. Provided, but the problem is, I think there's a mindset issue. Many of us in this industry believe that, profit making is a bad thing. We should be into this charity business or NGO business, so on and so forth. So if you don't change that mindset, I think there is a problem.
So great. I mean, we've heard the first take was focus on the customer, the community. Second is technology. We're not talking about business model changes that could help small MFIs. Satish, can you maybe approach this from the policy level, and is there policy level changes that could benefit or that small MFIs could be supported with?
Policy level with regard to, actually if you see, the entire sector itself had attempted twice to bring about a comprehensive bill for microfinance regulation. And after that, when the present government announced Mudra, earlier it was intended to do some sort of a regulation for microfinance also. But what has happened is that after the Malegam committee report and Reserve Bank coming out with a set of framework for NBFC MFIs, what we can say, the order in the sector for getting a comprehensive regulation for the entire sector, that was almost lost. We have given up. So I was feeling that the sector thought that whatever which Reserve Bank has given as a circular, that is suffice as far as regulation and policy is concerned. And that I would say is suboptimal, because today again, whenever there are hotspots and whenever there are issues and whenever there are statements, because all our team just returned from Maharashtra, Madhya Pradesh and Uttar Pradesh, I myself was there in Lucknow and Calcutta. So again, you have to start from saying that NBFC, MFIs are regulated by Reserve Bank, and we have to give the entire story. We used to joke when NABARD was first formed that so-and-so committee has recommended NABARD, and we were also originally part of Reserve Bank, and it was formed and all. So all that history, again, we will have to tell. So in the eyes of the general public, general people, the sort of legitimacy which this sector should have, similar to a bank, that has not been achieved by this suboptimal regulation with which we are all alpasantoshis. We are satisfied with that. So I think unless the sector again takes up for a comprehensive regulation, because even when both our neighboring countries have a reasonably good regulatory framework for the entire sector, that I think on policy there has to be a lot of policy advocacy which has to be done, and what we have given up. Tamal was mentioning about lazy banking. I would say we have all got accustomed to lazy microfinance. So unless we look at this entire framework and try to do a lot of huge policy advocacy, I would say it will not be very easy. It's not an easy task, but the sector has to do that. The associations have to do that. Otherwise, this on and off issues at the grassroots level will be coming up on and off, and we will be always firefighting, sending our people, talking to the DMs, talking to the ministers. So that's what Ratna and myself have been doing in the last 2 weeks. So whereas no bank, State Bank or even IndusInd Bank chairman need not go and say that we are a bank regulated under BR Act and Reserve Bank regulates us and all. So that policy advocacy is a difficult task for all big MFIs, small MFIs. This has to be done because just because the bigger players have become small finance banks, it doesn't mean that we should leave the entire sector in the lurch. So that's one great policy advocacy we'll have to do. And another, along with the policy advocacy, is that I would say, my friends are sitting in the first row, NABARD, SIDBI, and Mudra. All these three institutions have a great role in hand-holding, which even NABARD in as early as 97, 98, all the big NBFC MFIs today, some of whom have even become small finance bank, have started with 1 lakh rupees of grant support from NABARD as an NGO MFI. And later SIDBI's SFMC has had come in with a lot of support. So again, I would say that for the medium and smaller institution, we look at the support from these three development finance institutions. Because I had worked with NABARD and had close interaction with SIDBI, and I am on the board of Mudra. And I have great hopes that these three institutions can do a lot for this sector.
Wonderful. We have a trinity that is sitting in the front that can address this issue, but you mentioned the point of the role of development institutions. Ragini, that's a good place to bring you in. And, you know, as Satish was mentioning, the sector began, a lot of the small MFIs at that time, large today, began with institutional support from the development agencies, multilateral. Do you see a similar role being played where you can focus back on that sector that are small MFIs and providing them with, you know, as Chaitanya mentioned, when they were small, they needed, you know, community-based focused efforts, and Srinivas talked about technology. Those areas that, can you talk a bit about that?
So I think that is exactly what we've been working with Sadhan on, you know, picking up institutions, looking at whether they, you know, absolutely agreeing to Tamal's point, whether they really have the wherewithal to survive, you know, because there are certain fundamentals which have to be followed, you know, whether it's governance, these are size neutral. That is governance, transparency, you know, your board, your management, these things are not negotiable. So we tried to bring it in our program, and there were 6 institutions which were not reporting to Credit Bureau, which started to do because of help of Ananya and LAMP, and of course Sadhan is there, which is working with M2I to do that. Similarly, all the institutions have to report to mix. So it's a step towards transparency. But so there are several such measures of capacity building, like Sadhan is running governance trainings, and also will have a repository of independent directors who can then go and work with them, because they're not able to attract that kind of talent. So this is the capacity building part. But even at the sector level, in terms of enabling these institutions to exist, I think institutions have to pass the muster of differentiation. So how come Cashpoor became that large and others haven't? Because it had the proof that 77% of its clients are below $1.25. So it's like measuring, reporting on that differentiating factor is, I think, very, very critical. So that is at the institution level, and I agree completely with Anand that it begins with institution, what you want to do, what do you see your role in the whole landscape. But the second important thing is that, does the ecosystem reward good behavior? Is Cashpoor an aberration or it's a rule? Because when the crisis happens, good and bad doesn't get differentiated. Everybody gets affected. And even on demonetization question, it is not the size question, it is the geography and political question more than the size question, because it affects them equally. So when I talk about ecosystem players, it is also about agencies which rate them, So while certain things are non-negotiable, like governance and transparency and this, there are other things which you don't penalize them on the size. That just because you are in one state, you get 0 on diversification, hence your score comes down. Your equity, because your legal form is section 25, your capital adequacy ratio is low, so hence you get rated.
Can you think of any specific ecosystem, inbuilt reward system to support small MFIs? I know my colleagues from MSDF in the panel next door are talking about a differentiated pricing mechanism, that if you can prove that X number of your clients are below a poverty threshold, then there is 75 basis points back. Is there something that...
Yeah. So we tried it in our soft loan, So anybody who has a particular COCA rating or is in areas which are specified by Credit Bureau are underserved, we give them at a 2% lower rate than others. So we are trying in our own way in terms of quantum, better capacity building support, to institutions who show promise. And then complete non-negotiable things, like every institution goes through a loan portfolio audit irrespective of size. So you're rooted out there and then if your LPA score is, so you have to, as a sector level, lay down certain non-negotiable and then work around it.
Nilesh, we started with you. You talked about creating a niche. I think everyone's coming back in some ways to, if there is a clear value proposition that they are addressing, if there's a clear community that they are focused on, if there is a clear geography where there is underserved markets, then there is a role for small MFIs. So I'm hearing Tamal also talk about, let's not be general and say yes, hopeful or dismal, but let's talk specific buckets. Before we go to the rest of the audience to ask questions, your final comments as an investor, how would you, I know that IFC is looking at only the large names currently in your mix. Is there a need to have a special fund that's focused on small MFIs, either IFC or others, and so that we can really give that attention that piece needs?
So just to give you a sense, we are investors in MFIs in, for example, Nepal, right, where their size would qualify what is a small MFI here. And then for several years running, they're doing extremely well. So, this point that they can be sustainable, profitable, and do well in their niche, in their geography, it just stands out, right? So it's again a relative question, but given the geography here, certain kind of institutions work. For us, we are not built to work with extremely small institutions. So what we do is we try this to our investee funds. And we've been doing that for a number of years. So, we have institutions like Lok Capital, Avishkar, and so on, where we try and see that they can work with the next level. And even now they're seeing the bigger appetite is coming, not just in the pure MFI play, but in people who connect across, build partnerships. So it could be a housing finance company, but in that segment, working also as a BC with someone else. So this need for partnerships and this niche in geography or something is coming actually from them rather than from our direct investees who have now grown to a certain scale. So I think this differentiation aspect remains completely relevant even now, and will only grow, and even going forward. And I think there is a lot of scope for innovation in that side. It may not be just be on the geography, but also on product. So combination of both.
Excellent. So I think what we're trying to sort of get a sense from the house and from the panel is really the fact that we are seeing the change both in terms of the evolution of NBFCs or NGO MFIs up possibly to universal banks, and the change that demonetization seems to be brought on. I mean, to parody Shakespeare a bit, sometimes change is thrust upon us rather than just greatness. And so to that extent, how do we deal with that change is becoming critical. These days you wait outside an ATM for change, but that's another matter. Let's open it to the audience and take some questions from the floor. Yeah. If you identify yourself, maybe you want to direct it to a particular person and try and keep it as brief as possible.
Yeah, I am from Empower Project, IFAD, Rajasthan. My question is before Mr. P. Satish and Ragini ma'am. How far or how long small MFI will survive in competition with the bankers? Whereas bankers are having less ROI rate of interest in comparison to the this MFI. Say bankers are charging around 10 or 11 or 9%, and MFI are charging 22 or 20%, more than 18%. Number two, banks are getting refinance from NABARD at very lower rate of interest, say 8 or say 6-7% like that. And bankers are also having good network and infrastructure after nationalization, that is 1969. Banker sector.
So I think the question is a good one. How long will they survive?
Number three, sir.
No, we've got the reasons, sir. You don't need to go through the reasons.
Banks always fix their ROI, keeping in their cost of fund. And last, these banks, there are minimum, these requirements are there. Suppose minimum lending in
So we've got the question. I think the key question is how long will they survive? Ragini, Satish, he seems to have made up his mind that they will eventually not. So you have to just give him a time frame or tell him why you don't agree.
I think they will survive as long as they are relevant and they offer a useful service. And we have known in so many years that cost is really not an issue, So that's what is my take.
Since it was also.
If the banks are doing so well and providing all the services, then there's no need for MFIs, no?
Okay.
We know that Kotak just acquired VSS, so that could also happen.
So there's an acquisition opportunity. Srinivas, you didn't fall for that bait when you were pointed out whether you want to acquire, but maybe later. Any other questions? We seem to have answered all the questions or created enough of confusion. One of the two, but I think what we've seen really is the fact that there is clearly a room if there's an opportunity that needs to be addressed. Technology needs to be addressed. Business models need to be tweaked. The ability to bring in ecosystem-related changes. And as Satish mentioned, support from development financial institutions. And then, as Nilesh said, putting in place the right trajectory platform to bring that. We have a question. Yes? Go ahead.
Myself, Poddar. Hello. Myself, Poddar from IDF FSPL, Bangalore. The role of SROs post-demonetization needs to be enhanced because there are self-styled leaders or so-called politicians, other things. They are, as we discussed by the panel, they are misguiding the public, and under the guise of this demonetization, the refinement is getting affected. So it is, if it is for a short period and it is followed up only demonetization, crunch up the cash, it's okay. But it is likely to create a distasteful environment in the recovery area because loans will be later on waived off and all the things are coming out.
Satish, you mentioned this in the past about the need to bring in, but maybe you want to just talk about it.
Yes, I think this is the, when I was mentioning about firefighting, this is the one thing which our teams were there on the field in all the states, that is meeting with the political leaders, bureaucrats, then getting some statements, then and also talking to the press in all in 4 states. We've already done to do that in Karnataka from our side. Both Sadhan as well as MFIN are doing that because it's a basic issue of borrower awareness and borrower education that it has to overcome the whatever pronouncements which are being made locally. But one of the reasons why in all these states which our teams have come back with us is that why such a statement is finding such a immediate acceptance. One of the reasons is the session which we had prior to the lunch, the plenary session. The issues are real actually at the grassroots level, and some I would say that the seed of some of these which has led to the political leader statements is not just demonetization, but the way in which the sector itself has been taking up the issue of lending over the past, I would say, 18 months.
So Satish, maybe you want to just take, and maybe we'll start with you for the closing comments and we will end with the lady this time. But we'll have the lady say the last word. But Satish, in terms of the 2 banks, 2 MFIs, and now with many MFIs becoming banks, the whole issue of over-indebtedness sort of raised its head again. You mentioned Malegaon in your earlier comments. Are we seeing a possible Andhra scenario? Are we being saved by demonetization in some ways because of the cooling off that seems to be happening now? How do we make sure we don't repeat the same mistakes?
No, one thing which is that it's not irrespective of the number of the lending institution, because our combined industry code of conduct talks in terms of irrespective of the type of the institution, the sector should try to follow 2 lenders. Because basically, we should not put a borrower into a debt trap. So that's one principle which we have to follow, and a lot of discussion was there in the previous plenary. I don't want to repeat, but I would only say that all our institutions should also look back and question themselves that is the incentive system for our loan officers and credit officers is also fueling such a behavior of over-indebtedness and over-lending that we will have to introspect from the sector side also.
Okay, so more fundamental. Is there any last question? Yes, we have now 3 hands going up. I'm sorry, we have 4 minutes, 45 seconds. So very brief. Yeah. DSK.
Yeah, I don't have a DSK Rao from Results Educational Fund. I mean, it's not a question, but I would like to make a suggestion. I'm wondering, a small microfinance institution may not be able and will not be able to compete with a small bank or with a bank, and they may not be able to survive. But I think if they cannot compete in the financial services, perhaps they can go beyond financial services and create a niche for themselves by adding some non-financial services to their financial services, so that, because being a smaller institution with lesser cost of human resources and in a local area, they will be able to perform much better, compete much better by creating a niche for themselves, going beyond financial services.
Excellent. So the broader impact is a suggestion. Great. Yeah.
Hi sir, I am Harita, I am from Ujjivan. My question will be Mr. Tamal. Sir, you said the laziness of bank. Is it a laziness or is it a regulatory issue? That is number 1. Because banks are governed by lots of regulatory and audit issues. Second, after the demonetization, banks are allowed, people are getting SMS, they can give their outstanding EMI credits and everything in the old denomination. But MFIs stopped to take the old notes. The money distributor MFI is also backed by the same KYC. So why there is discrimination with the MFI to collect their money, which creates a more problem in front of bank. The customer are standing in the queue and not able to deposit his money, where the customer can easily give his old notes to the MFIs in terms of their EMI. So why is there discrimination? And that creates...
So we'll take the last question and then give it to Tamal. Most likely the last question will also be for Tamal. There was someone who had yeah, go ahead, the lady. there's a mic coming to you. Yeah.
Good evening. I was just wondering, since we've been discussing challenges, do you see any potential untapped areas, green spots where you think new entrants or existing small MFIs could, potentially enter activities? Say, for example, warehousing, agri-warehousing. I mean, just a thought out of it.
Sure.
Any areas like that which you think holds promise?
So maybe, Tamal, when you're answering those, you could also talk about Nandan, Nilekani and Tata starting an MFI. Are there room for more people to enter when we are talking about the small ones may not have a future?
Sorry. This gentleman had two questions. I am not qualified to answer the second question. Only the regulator can ask why this discrimination between banks and MFIs.
Since you have so many hats, Tamal, since you wear...
No, definitely I can't answer that question. And yes, I don't wear it. And the other part which this gentleman says, and the lady also saying that can MFIs do other things, warehousing, etc., etc. I'm not very sure, but others do the bit of capacity building that MFIs do. Bandhan does, I know. Equitas has been doing. So there are issues they are doing. Apart from giving pure finance, MFIs do capacity building. Am I correct? Some of the MFIs do. That one question I can answer that you said about whether it's a lazy banking or they are restrained by regulations. I'm afraid there is no regulatory restrictions. It's a market driven. There is every interest, whether it's on deposits or on credit, it's free. What interest do you pay? Who do you give also, it is free. There are only restrictions on how much you can take exposure to an entity, a corporate entity, as well as to a group entity. That continuously get fine-tuned, like Reserve Bank of India last week again made some restriction on that. But otherwise, who do you give lend? Who do you lend money? Who do you feel it's credit-worthy, etc., etc.? Everything is entire prerogative, your risk management system and your capacity. Now, the banks do not find the so-called bottom of the pyramid, people who do not have a regular salary, who are wage earners, so on and so forth. Banks do not find them worthy to be given money. Banks do not trust them because they do not offer any collaterals or any securities. So if a money given to them, if this person, the lady or the gentleman cannot pay back, it goes into and it becomes an NPA, and banks are scared of that. So under the norms, in fact, regulations forces them to give loans to that kind of people. Under the norm, 40% of your total, if a bank takes a 100 rupee deposit, 4 rupees goes to Reserve Bank of India in the form of CRR, cash reserves ratio, and then 21 rupees 25 paise probably, or 21 rupees goes into government bond, where you need to buy, because India runs fiscal deficit, you need to buy that government bond. Even though it's 21 rupee 25 paise, it's actually much more you buy. And the rest of the money which you which you can give, you are under the regulatory requirement, you need to give 40% of that to those people, the self-help groups, and there's, all those farmers, the cobblers, the rickshaw pullers and all. But banks do not have the wherewithal to reach out to them, which is why bank uses the microfinance as an intermediation, and bank's exposure to microfinance is treated as a part of their exposure to private sector lending. So there is no regulatory barrier of giving money. It's all your risk management and your approach to who do you think is credit worthy.
So on that note, I know you may have all noticed that the time was running up, but very rarely do we have the most famous editor of the Mint giving us an expose on the great sort of economic regulation around the banking system. So we want to take the full opportunity for that. Thank you for being a wonderful audience. I thank all the panelists for sharing their various insights. We'll see you on the other side of the tea break. Thank you.
Thank you so much, panelists, for an engaging session. As a token of appreciation, we request the panelists to accept the souvenirs as they walk down from the stage. And we'll now break for tea. Please reconvene after 10 minutes, like around 3:45. And join us for our plenary session from MFI to small finance banks, transacting business differently. Hope to see you there.